Good afternoon. So what's the projections for the real estate market nationally for 2014? I'm Dale Snyder with the Snyder Group at Team Driven Real Estate here at Keller Williams Realty in Las Vegas, Nevada. This data is going to be an overview for the national trends and what we're expecting for 2014. If you'd like how this is going to impact Las Vegas locally, whether it be in the investor market, the luxury market, in Summerlin or Green Valley, or the city in general, make sure to subscribe to our YouTube channel because we'll be getting those videos out to you as well. The data that we're going to be going over today comes from Keeping Current Matters. Very great information, and also I want to make sure to point out, and this is going to be at the end of the video, you'll be able to access this, where the resources are coming from. It's important to know where this information is being gathered from. So that'll be in the description below at the end of the video. All right, so let's jump right in. Chief Economist at Freddie Mac, Frank Nothoft, says, we expect single-family home sales and housing starts to be at the highest level since 2007 nationally. Meaning, we're going to have a record year for housing sales nationally, is the projection by Freddie Mac. This next slide's fantastic. I really like this here. It shows the year-over-year price changes by state. So you get a good overview of the nation and what the appreciation rates were. In Nevada, 25.2%. Looking at this, we had a higher appreciation rate than any other state in the country. California was close. All right, this next slide is very interesting. Talk about the sustainability of the current price increases. You'll see the darker blue, purplish color is unsustainable, and the darker blue is sustainable, of which Nevada is included. But you'll notice the surrounding states they're saying are unsustainable. And then the lighter blue is the undervalued markets. So contrary to what a lot of people are saying about Nevada, the expert analysts are projecting that what we've seen in Nevada is a sustainable price increase. Next slide shows days on market nationally. You can see this doesn't encompass the whole country, but you can see Las Vegas average days on market 75, and the U.S. average is 86 days on market. Days on market has increased as we've gone into a normal market here locally, and we project that the average days on market will increase, especially in the higher price points. All right, this next slide shows the distressed properties based on a month's supply. This one's interesting, obviously, to me, because we live in Nevada where we still have a lot of distressed inventory to get through due to the bottlenecking based on legislation changes. You can find many videos we've done about the AB 284 and other laws that have impacted the foreclosure pace in our state. But you can see a 6 to 8.9 month supply is what they're saying in Nevada. Only a few other states on the East Coast that have a higher month supply. So that's something we'll discuss in more detail in our localized video. All right, year-over-year change in prices. You'll see here that this goes from last June through September, and this just validates what we're seeing locally as well. The market is stabilizing, and it is nationally as well. It's a simple supply and demand, right? As inventory goes up, prices start to stabilize. This is a quote from Zillow's chief economist. The conditions that led to the robust appreciation experienced earlier this year, including historically low mortgage interest rates, high affordability, low inventory, and high demand, are waning. In their place, we're beginning to see more inventory and rising mortgage rates, which will lead to further normalization in the market going forward. Bingo, that's exactly what we're seeing. I network with a lot of top agents from around the country and Canada, and we're all seeing the same thing happen. This next slide, we've discussed this many times in previous videos. It's about a 5 to 6 months supply of inventory of homes, which puts us in a normal market where it's not a buyer's market or a seller's market. Right now, nationally, we are at a stabilization period where it's not a seller's market anymore. Buyers are able to actually go in, ask for closing costs, and the seller's not able to have all these crazy expectations of what the buyers have to do to get their offer accepted. All right, this next slide's fantastic here. I like this one because as we see investors start to pull out of the market, we are seeing that backfilled by the millennials and first-time homebuyers. Millennials are around 32, 33 years old and younger. See that, what is it, 1.2 million current households in the United States, projected growth of over the next 3 years of 3.7%. And the number of additional households formed, 4.48 million. And this is big numbers here, and a lot of it is the millennials coming into the marketplace. Okay, next slide here. Just another quote that I'd like to share with you from Bill McBride. Although the consensus is the Fed will wait until 2014 to start the taper asset purchases, December is still possible. And to clarify on that a little bit, what's projected is interest rates are going to go up about a point next year. Just by the government talking about tapering on buying bonds had interest rates spike earlier this year. So it's not a matter of if, it's a matter of when this is going to be happening next year. This is a great graph because it shows the 2013 30-year fixed mortgage interest rates. You can see we bottomed earlier in the year, and rates have gone up drastically. That huge uptick was when there was just talk about the Fed tapering off on the bond purchasing. Yeah, this slide's great here because it shows what the projections are from the analysts. You can see Fannie Mae, National Association of Realtors, Freddie Mac, and the Mortgage Bankers Association are all in agreement that the rates are going to go around 5%, so almost a full point increase. All right, this next slide really should hit home for buyers and sellers as well if you're trying to sell your home. The cost in waiting, if rates go up 1 point, and this is only on a $250,000 mortgage, that's $161 per month in your mortgage payment. So you multiply that over a 30-year term. That's quite a bit of difference in payment. All right. So I hope this information was of value to you. Once again, just wanted to give you an overview of what some expert analysts are projecting for 2014. So whether you're looking at buying, selling, investing, or you're just curious about the market, once again here at the Snyder Group, our goal is to get information out to you so you can make educated decisions on your real estate investments and needs whenever the time arises. If you'd like to have a more in-depth conversation about how this national trend is going to impact us locally here in Las Vegas, reach out to me. Shoot me a message. I'd love to have an educated conversation with you about your specific needs. And remember, we are going to be including more videos talking about what we're projecting for the local market, so subscribe to the YouTube channel if you haven't already. This is Dale Snyder with the Snyder Group at Keller Williams Realty, team-driven real estate. I almost forgot. If you like it, like the video, or share it with your friends and family. Have a fantastic holiday season, and we look forward to the opportunity to help you with your needs in the year to come.